Hello. Welcome guys for another market video. Alright. Wow. So what we're looking at is the dailies of the indices comp, NASDAQ, S&P, and Dow. I said Monday would be Bloody Monday. Those are my words. And I'm such an idiot. All I know is the futures. I got a NASDAQ E-mini futures, but fucking A. Anyway, we're down pretty big, 78 points, and it's just the start of the day. So, I mean, what Bloody Monday is Bloody Monday. Now a reason, I think we're gonna be dead until Wednesday. What's driving markets? Fuck you, Facebook. We don't really care, but we do care about the Federal Reserve and their two-day meeting. With the the FOMC, and so they're gonna raise rates, but you know, I think maybe they'll look for keywords. They'll pick apart, what the FOMC has to say. Um, we got this trade war with China. This is also on that market. Um, Stocks in focus, Apple. What are the markets doing? European stocks lost ground. Nikkei lost that, lost 0.9%. Um, Oil futures down. We're at $62 a barrel. Dixie is down. While gold futures also dipped. All right, guys. Now, let me say something about gold. I right now I think we're in a deflationary state, and I think all the safe haven assets are going to go down with the initial downward movement of the crash. Um, but then once they start printing money, once they start doing QE4, then we're gonna see that's when we'll see the boost and gold. That's when you buy JNUG. You heard it from me. Um, yeah. If Listen, don't take since I'm not a legal professional, you should not be taking my advice as serious. Go ahead, paper trade it, but if you lose a bunch of money, I'm not responsible. Um, Micron could be a good short. Maybe for like $10. You want to short at $10? Go ahead. Um, I think if we could get a divergence here and get a double top, but Micron did an awesome run here from the 40s. It's reporting Wednesday or something. So, um, you buy the rumors, sell the facts. So that's what it is. That's what we're doing here. This is all off the chains except for the CCI. The CCI has been bouncing off the top here. Same with the RSI, bouncing off the top. And we're not that oversold. We're only 80. So 80 is really 80 is really at the top of the range. But you know, but if it's really moving, it's gonna go higher. For instance, look here. We're at 85 with Dow Jones when it crashed. 88. So I mean, but I could show you here. Look, we're at 84 with the AMTX. I showed you that chart the other day. I'm just trying to get. Yes, see, I can't get. I don't have any examples here. Yeah, forget it. But anyway, that's the point. Is let's see, you got a good one here. 86 Amazon, and immediately dropped off. Let's see this one. Let's see Netflix. 91, 91 with Netflix, and it took a big dump, but then it continued to rise after it tested support. Okay. Well, okay. So I guess you guys would like numbers because numbers are better than just me telling you something. And numbers based off of a specific tool. such as my Fibonacci extensions or retracements. So let's go ahead and get everything up, and now we will go ahead and check it out. Okay, so we're pretty much testing here. Now, let's just say for some reason we do get a push higher, which I don't think we will. It's because we're hitting this support at 7,400. I don't know where we're gonna open. They have a predicted open on like CNBC or something, but like I don't know. I never find that to be accurate. I don't know what. Maybe it's just me. I just don't know. But I don't even like to look at that. So we might try and like have support here, but we're gonna fail it. So what's the turnaround? We will have support in the 50s. Look, we've had support here in the 50s. So today we might just go ahead and wow, the Dow is at the end of the range here. You know what I could do? I'm gonna redo this chart because you see I have the Dow. I set it up here, but the real low is here. So, and although this is accurate, look, 61% major fib here. No, this is accurate. I don't want to change it. I don't want to change it. I could change it, and that's kind of the art with Fibonacci is that it it applies to every candle and every move. You could do it. You could like do it here. An extension here. You could do an extension from here to here. You could do an extension from here to here. It all works, and you get to analyze different aspects of it. I love Fibonacci extensions. And what's even more useful is using extensions and retracements, and also using multiple extensions or retracements. That way you'll have a lot of pivot points covered. I know a lot of traders don't like to use them. It clogs up the space, which it does. It makes it harder to see the candles quicker. So it's not pretty, but it certainly works. Um, and this '01 bubble that I told you guys on another podcast or video cast that this level right here where the horizontal bar is, it's an extension from 2001. I set it up. So hold on here. Let me just minimize this. I just want to show you guys like what that means. Like what really. Okay, I'm gonna pull up the chart AMTX. We've looked at this the other day. But now, what's so significant about the 161 fib? Okay, it, okay. Actually, this is great. This is great. So let's make it a 5 minute just so we can see. Okay, so the first run here on a 5 minute, I set this extension, and now guess what? The markets didn't even come close to this. This was the top, and you can see it 1, 2, and it tried. It couldn't do it. So that was the closest this got to this 161. And you could bet a good safe bet would be before the 100%. And you to break the 100% and go to the 161. The 161 is like the second leg. The first leg is the challenge through here, and then you would have the second leg. And if you want to go even further than that, I broke it up. So this would be the 100%. No. This is the 100%. And this is the 161. And this is a 261. So it pretty much almost broke my Fibonacci scale. That's why I put up two of them. And yeah, okay, you could barely see what's going on here. But, when I'm trading and when it's minute to minute, I kind of rely on, these pivot points to let me know what's going on. Like, how can I play this market without, getting overexposed, or, you know, uh, or uh, or if I'm getting in at the right time, let's say. Okay, but anyway, let's talk about the markets. So I'll tell you boys support. We're at a 10-minute video. Whoops, I don't want the comp. We want SPX. Okay, so the floor dropped. The floor dropped like I said it would in the last video. That means we're gonna have support here. 74.16. The next support is we could even have it is right pretty much right here though. We're looking at 7,219, but it could be higher. We can get the support. So I don't know. We might get big drops. We might get little drops to this point. Like if we look at an hour chart, it'll be like in chunks. It won't be just straight down all day. It'll be in chunks. It might go up, but then it'll come back down, get lower. Um, but yeah, I'd be surprised if it gets below 7,200 today. That's a 200-point drop. That's pretty big. But we're already down 100 points. So if we're down 100 points, we're already here. And right now we're probably testing this. We want to have support here, or the market at least wants to find support. But I don't think it will. I think it'll just absolutely drop and the next range of support will be at this level here. And then once that's the case, then it starts to get iffy here. And we're gonna test lower this week. But at that point, the indicators might be overdone. It might be oversold. Everyone's gonna be like, "Oh, it's just rally. It's gonna keep going." So it all depends on where the support is found, and where they want to push the markets. It's unfortunately extremely manipulated, and the only thing that looks good right now is the Nasdaq in a sense, because it did have higher highs and it was much stronger. The S&P and Dow Jones, they didn't do as good. Not by a long shot. Not by a long shot. So they're much weaker. Um, and I think I just think it's gonna like get worse, and there's gonna be more fear, especially at the end of the day. Especially, like with markets down. Let's go ahead. Look at that. I can't believe. Wow. Look, the bottom dropped off again. That's crazy. Oh, well, there you go. There you go. Let me tell you what I think's gonna happen here for these guys. So 50% will get it. So at 2,705, we'll have a little support. And we'll have a little support. We'll have a lot of support at the 38. The 38 is pretty critical. And when it fails that, it's gonna have some problems at 2,663. Oh wow. Okay. And we're at the critical support for the Dow Jones. But so when it tanks this, it's gonna have to get support here at the 23%. But again, we're not much further from here. Well, the S&P, we got room to fall. We got room to this 38. That's critical support usually, and we're already at the 38 here. But you know what? Let's make it even. Let's do it at the bottom. I know I said I wanted to keep it, but that's the glory of it. No, don't remove RSI. What the fuck? Damn it, I always do the retracements the wrong way. Oh, okay, yeah. So it actually bounced off the 38, which is an awesome sign because that shows the support that it had at the 38. It's just automatic, you know. So it's gonna fail the 50, but it's I'm guessing it already dropped 100 points. So we're already at we're already at 8. So it already failed it. It's going back down. Um, it's gonna have to test the 38 again. 200 points down. Um, so there you have it. We're gonna have to test this and go even lower. And we're not even that close from the lows. So get ready, guys. Get ready. This is gonna be a rough week. Um, we're gonna have those numbers. I mean, we're gonna have the Fed come out and raise interest rates. So that's gonna spook everything. Let's look at the 10-year. Oh, I should have just pulled it up over here. Oh my God, we had a giant gap up in the 10-year. We're already at 28. 10. You know, I really don't like to say this, but I'm gonna say it. I fucking hate Cramer, and because Cramer just pumps whatever CNBC wants him to. He's like the pumping, jerking monkey, you know, goofing around, hitting all his damn buttons. Yeah, it's very entertaining, but it's not. Okay, so right now it it exploded. It exploded. We are at 28.79. 28.79. But wait, why does it show an explosion? I guess because it doesn't move much in a 1 minute, you know. But it's going higher. We're gonna hit much higher. Let me look at a better chart here. 1 day, 10 minute. Okay, well, it's gonna have to come down a little bit. Um, but I do expect another ring up. And I did say last week that we were gonna start to reverse, and I guess we technically did on Tuesday. Um, we did reverse, but it wasn't what I thought it was. So this reversal might be done, and it might start to go down at this point because the RSI is overbought. Um, so there might be less pressure from the 10-year this week. But I think overall, I think they're going to start trying to sell more bonds. So that itself is going to push the TNX up to 10-year up. And usually what happens, if the 10-year starts to get more value than the 30-year bond, then that indicates it's a recession. Now, the Federal Reserve did a paper on this. We talked about it in a previous podcast that the the Fed says, oh, that's not the case for this time because of I forget why, because of some bullshit reason. But if that usually indicates recession, and that's something we're headed for. Okay, on an hour chart, this looks like it can continue rising. Um, and I think it might actually. Let's look at a daily, baby, please. Oh wait, the daily's not going to show it because it's not counting this. Let's look at a weekly chart. That's interesting. Yeah, this weekly chart looks overbought here. We're pretty high, 60. Yeah, so if anything, we're gonna drop below this moving average. Maybe Kramer says we're gonna get okay some numbers and worse than expected like home whatever's coming out Friday. I'm so sorry, guys. Should be a little bit more prepared. But anyway, we're gonna cut the video. It's probably been like 20 minutes. Yep. So we get a lot of content here, but this is a critical pivot point, and I pretty much called Bloody Monday, flat out. Um, oh no. You know, um, we are down a little bit more, but yeah, it's gonna go down a little bit more. We're gonna have a big red day today. All right, well, guys, thank you so much for watching. even though none of you watch. Um, you know, you may say, why does this kid have credibility? Well, look at what I've been saying. Look at the charts I'm showing you. You know, like I'm surprised not many more people are watching this. Um, I mean, I see other videos where people use charts and show stuff, but they don't actually go into the technical analysis side. And I think that's where I differ from these other people who are telling you about market information or what's going on in the world. Is I got this background of intense technical analysis, and this technical analysis helps me see this foresight, um, you know, and helps me understand. And you know what? You guys help me understand too, because I'm so bearish that on the daily this looks like it's gonna fucking run up, but it also looks like it's gonna fail this trend line support, not trend line, but moving average support. Sorry, you guys help me realize that I'm too bearish, and so I can't look at my own views and push them onto the market. I need to look at the market and see what the market's doing. Um, yeah, how did I know we were gonna have Bloody Monday today? Well, partially because, well, all because of support and resistance. I clearly saw what was coming. Because of this extreme resistance from 2001. And why did I think to look back to 2001 and make an extension? Well, because I am bearish. So it goes hand in hand, but at the heart of it, we need to be reactionary to markets, and that's how you make the money. Is not by saying, "Oh, I think this is going to happen," and bet it. No, you have to say, "Okay, well, this is happening in the market, so I think um, if we apply ourselves, we can make a little bit more. We can make money here because this is what's happening, and this is a possible trend." So there you have it. Um, there you have it, guys. Thank you so much for helping me be less bearish, but also take what I'm saying, use it to your advantage. This is not financial advice, um, but you use it to your advantage because, well, I'm a classical I'm a classical um, liberal. I'm a classical liberal, like the founding fathers. I'm a libertarian. Um, so I come from freedom, and I really don't like these propped up markets and propped up economy. It's not real. It's not genuine, and it makes me sad. And it's the American people are being fooled, and some bad things are probably going to happen. Um, but that's a topic for another video. I may get another video today if things go bad, or if things change, or something happens. So I'll be in touch. I'm sorry I haven't made enough videos lately. That's that. I'll see you guys later.